Thank you very much, and it's really an honor and a privilege for me to participate in this conference. And once again, I want to really appreciate NOFAD for giving us this opportunity. It's exciting for me to talk about SMEs because they speak to my heart, because I run an SME organization, one. And two, I've been involved in the SME space for quite some time. I sit on the UN Advisory Board on inclusive finance, on SME, the G8 and the G20 on that, and the World Bank. So it's essentially it's something I do on a day-to-day basis. But I don't think I could be able to build a better case than has been built by the chairman of OCD and the chair of NOFAD with the data, because data really puts things into perspective. But let me try and push this now from a developing country perspective. And I'll try to narrow this down to a country that I fully understand most, called Kenya. That's where Equity Bank operates from. And I happen to be involved in the structuring, the development of Kenya as the chairman of the country's Vision 2030. Vision 2030 is an aspiration of the Kenyan people onto how they want the country to look by the year 2030. So I have quite a bit of data. And what does SMEs mean for us in the development of the country? SME on two fronts means the private engine that sustains and scales development of the country. It is true Kenya has, East Africa and Africa generally, has a very robust private sector. But if you look at the private sector, it has in the past been dominated by global multinationals going to operate in developing countries. You look at, for instance, let's again zero down in Kenya, and you look at telecommunication, the biggest company, Vodafone, the second biggest company, Airtel, the third biggest company, Orange, and that's all. So the question is, this private sector is not a face of the people themselves. The sense of belonging, the ownership issue tends to be raised. And people say, yes, we have a private sector, but this private sector only provides employment and nothing else. The wealth created is not created for the people. And the question, is that model sustainable? If that model, then you put questions on sustainability, then the answer that so far we have got is, why don't you create SMEs? They become part and parcel of the supply chain of the multinationals operating in developing countries, and we start having prosperity being shared by the global investment companies and the private local actors through a linkage and partnership. And essentially, that is the model that we are really advocating, that truly to develop the developing countries, the best thing is to promote small and medium enterprises. I know before an enterprise becomes small, there is a phase that we call micro. And micro for us is also central because that is an incubation phase. It starts with the sustainability, and suddenly the enterprise becomes too big for the family, and you now categorize as small. Small means you have started formalizing. By the time you become medium, the enterprise is now more formalized and can compete in the marketplace, and it's on its way to become large and hopefully become a global multinational in its own light. So that is the phase that we look at. And so, having said that and putting these perspectives, so for us, SMEs in developing countries reflects, one, the face of the local population. It's very difficult to have SMEs being small global companies. Normally, they represent national or local interests. So they become the face. The second one, they bring in a concept of belonging. Yes, this private sector, we participate. There is a strong sense of belonging, a sense of ownership into the economic activities. Three, they represent a mechanism for shared prosperity. It's a mechanism of sharing the outcome of development. It's shared, and so it's a distribution mechanism through participation. And third and fourth and most important, it gives honor and dignity to the people. They are not just spectators. They are also active participants in the development of their country. So for us, that sense of pride, that sense of honor and sense of dignity is very central. So it is not purely a commercial aspect. It's not monetary relationship. It's all about the human beings in terms of all their needs, whether it's social, whether it is honor and dignity put all together. Let me now then come down because the data we know what to the macro level SMEs contribute in terms of employment and wealth creation and the rest. Let me narrow it down to giving you an example of Equity Bank, which itself is an SME. Equity Bank was started 30 years ago in a village called Kagema. Kagema is a rural village where the population realized they didn't have access to financial services. One, because the banks were too far, there were no rural branches. So they started what you could call a village system of saving. And there was born Equity Building Society under the mutual fund of pooling resources together. And as Equity started off, it started growing in the village, fulfilling the needs of the people, but giving them a sense of ownership. We own this thing. But of course, as we know from an economic perspective, when the scale is too small, you rarely reach economies of scale. So they realized micro enterprises are not suitable for financial services, basically because of economies of scale. You don't reach break even. So 10 years later, they were declared technically insolvent on the basis of economics. And then they said, no, we need to make it a medium enterprises. And that was my first engagement with Equity Building Society. How do you make these viable? And so the issue was, let's increase scale. Now, the advantage we had was that we had local knowledge. And SMEs normally have a lot of local knowledge that we could put on the table. And we said, okay, for us to reach scale, we must be able to move beyond the village so that we are able to attract enough number of customers. So that was important. The second one was that we must create systems that could reduce the cost of access, such that it's not a brick and mortar. We adopted technology in our SME. The third one was that we needed finance, and the savings was not being enough. However much people were putting in their savings, converting them into shares was a real challenge. And we said we really needed a mechanism of creating this funding for these micro enterprise. So in 2002, we became the first investee of a fund called AfriCap. It was intended to invest in microfinance. And in exchange of $1.6 million, we gave out 16% of Equity Building Society. And so we got funded. Funding still small, 1.6. I don't know whether it is medium or small, so we were still small. And we worked on a little bit with that. We bought our computer systems, we developed appropriate products, and we moved away from the village and started going to larger towns and provide support for that. 4 years later, we had outgrown the capital base of Africa. So in 2004, we went private, and through a private placement, we raised $10 million. And we thought this was a lot of money. So we were now focused on moving from small to medium. And with medium, we thought, we now can change our legal form. And I really like what the chairman said. The legal framework is very, very central. So we said the Building Societies Act was too weak to support an enterprise of our size. So we converted into a small bank and became a medium enterprises. Meanwhile, Africa is still there. And 2006, they said, we have invested in this small enterprise. It's now becoming medium. Can we exit? 5 years later, for every dollar they had put in 2002, they exited with $80. So you can imagine $1.6 million became $106 million. They were happy. They had invested in an SME, and through the growth, it had rewarded them. SMEs can grow and grow fast. So we realized now what we really needed was an exit mechanism, because Africa sold to the staff. We created an ESOP, so it was more of a management buyout. So we said, we needed more capital. How do we get money? So we listed the small enterprise in the Nairobi Stock Exchange through an introduction without raising money. We wanted to create liquidity, and we also wanted to understand value. So essentially, the listing went through, and again, we started growing even faster. 2007, we used the value to raise money. And again, we offered 25%, but now we had a price fixed. And Helios came in, bought 25% of the entity, but this time, not for $1.6 million, but for $185 million. Now, you can see the growth of SMEs. From 1.6 gives you 16%. 4 years later, you need 185 million to get 25%. And that really helped us now to grow. So capital became very important for SMEs. And that is the collaboration I could see the Nordic countries supporting SMEs in Africa. We need that. But beyond that, we also tapped into Helios in terms of governance structures. How do we build solid governance structures that are effective? How do we create succession plans? How do we build capacity? And it's essentially in the organization. So again, capacity in SMEs is very important. So the story went on. To today, Helios exited the last 3 months. And all of us know that although it's 7 years, 5 of those 7 years were through the global financial crisis. But the SME called Equity Bank continued to generate wealth. And so Helios exited on Kenya shillings basis 5 times better. So the $185 million had become $500 million. Now, what happened to Equity Bank? Equity Bank, which was number 66 when we started as a small enterprise, kept on growing. From a balance sheet of $300, Equity Bank today has an asset base of slightly over $4 billion US. What has happened to the shareholders' funds? From a technically insolvent organization 20 years ago, the net worth of Equity Bank today, from a balance sheet perspective, is slightly over $700 million. Now, this belongs to the owners, the Kenyans themselves. They have been helped to build an institution they are very, very proud of. What happens to the market value because we are listed? At its peak, Equity exceeded a market capitalization of $2 billion US. Wealth has been created in a developing country and is in the hands of the local community, but has been facilitated, 1, by AfriCap, funding, providing capital, and 2, by Helios, providing additional capital to support growth and create systems and processes to grow the organization. I'm happy I'm standing before you because NOFAD thought they could support this enterprise. And today, NOFAD bought half of Helios holding, I don't know for how much. But all that I know is that we now have a shareholder who could support us to grow and grow a local indigenous enterprise. Now, it's not about the growth. The most important and significant aspect, those who knows Equity Bank in Kenya, it's the iconic nature of the brand to the people. People said, wow. Okay, maybe I need to finish the story. It's not just in value. Equity Bank, which was number 66, with only 2,000 customers, a balance sheet of 300, and always making losses, is now the largest bank in East and Central Africa in terms of number of customers, exceeding 10 million customers. Because people love it, it's because it's their own bank. It's a creation of the local community. So there is a lot of pride in it. The second thing, it has the largest market capitalization in the Nairobi Stock Exchange as a bank, and has allowed a platform of local and foreign collaboration. So the locals now own 52% of the bank, and foreign capital owns 48% of the bank. So people feel it's our bank, but we have invited the international community, including NOFAD, to participate in this organization. The second aspect is that it's now bigger than any international bank or any government operating in Kenya. It was last year's most profitable bank, and in terms, so essentially what has it done? It has inspired the Kenyan people to say, if we could succeed to create a bank, we can succeed to create insurance. And we now see that people are inspired to create businesses in every sphere of the commercial world. Why? Because they have succeeded in one. So that is, to me, the greatest inspiration. But having realized the power, what we decided to do was then said, why don't we give back to the community that created us? So Equity Bank created Equity Group Foundation. And Equity Group Foundation then leverages on the infrastructure of the bank to do good to society. So over the last couple of years, maybe 10, we've managed to convert 500,000 peasant farmers into agribusinesses. We've been able to take through 1.6 million people, youth and women, through a 11-week financial literacy program so that we can build their capacity and they can enjoy the financial products being offered by Equity Bank. We've been able to take 10,377 orphans and very needy but gifted kids through the education program all the way to high school. And we've been able to take 3,000 of the most promising leaders in Kenya through a university program, with 265 of them going through Ivy League schools. Now, that is what an SME that has a huge, deep-rooted structure in community can do. It can give back, it can inspire, and it can be a conduit. And I'm hoping NOLAD, another developer institution, can then come and use this infrastructure that we have built to do good. What infrastructure do we give like NOLAD? We give them our IT capability. We give them our 240 branches. We give them our 20,000 agents. Now, prosperity, because of local knowledge, we are sharing prosperity by saying we no longer need to own branches. Why don't we go to the shopkeepers who traditionally has provided credit to the villages, and we formalize that and they become our agents. So we are now banking through, and 56% of all our transactions are going through the agents. And the best agents earn approximately $10,000 per month on commission through that partnership. So again, it's shared prosperity. And we are moving on and on. So essentially, that is what I see supporting. So today, after supporting a small enterprise, turning it to a medium enterprise, we have created the largest bank in East and Central Africa from community grassroots basis. Equity employs 9,000 professional bankers, becoming the biggest professional employer in East and Central Africa. Yet it's an enterprise. But for Equity to reach there, it needed partnership. We started with Africa, we went to Helios, we are now with NOFAD and NOFIN. And essentially, that is the collaboration for development. What are we seeing? Development in Kenya. I myself have now been told, share this Vision 20. If you could do that with an enterprise, we can do it. And the private sector starts influencing government. It's no longer government doing it the other way around. When you succeed and you are respected by the political system, you become a source of influence. So since the inception, I've been told, you steer it, ensure. And so you are able to have a voice and a moral authority over politicians and say, this is right, this is not right. We don't do this in the private sector, and you start having that dialogue as equals. And that's what I realized there. But essentially, I want to say technology is also very important. And the West particularly could essentially be able to help transfer of technology. Technology is very, very innovative. The last one I want to say is integration in terms of this perspective. Integration, once you succeed like we succeeded in Equity, I'm told sit on the G8 advisory board. So when I go to the G8, I go wearing the cap of the farmers, of the workers in Africa. And so their voice is put on the table. I think that integration is a mechanism that we could be able to use to give the voiceless a voice on the table for development. And lastly is, and this wall is me, we can't develop systems for developing countries alone. And I hope NOVAD will help us. How do we integrate those systems built through small and medium enterprises to global systems? Because essentially we need eventually to integrate these systems such that you don't have consistently calling them local indigenous systems and global systems. You need integrated systems. So that is a puzzle that we haven't been able to push. But since we have come this far, and today I have a podium, I have an opportunity to tell NOFAD, that is bothering us. And nothing to hear. How do you get the system to integrate? The success of Equity has been partnerships. We have leveraged on partnerships. We have got American Express, we have Visa, we have MasterCard giving us the platform. So the payment system that we do in this SME are global system. We issue American Express cards, we issue Visa cards, we issue, so we are globalizing in one aspect. But we haven't globalized in terms of ownership. And that is why listing for us was very important, so that we can have integrated systems. Risks, particularly management of risk. You can build these systems, but there are things that you require a lot of knowledge over time, like risk management frameworks. You need those to borrow, those which have been perfected. Credit scoring systems need to be perfected. So there is a huge opportunity for overlap. In a nutshell, as I summarize using the last 2 minutes, once again, I say SMEs reflect the face of the developing countries. They bring the people of the developing countries on the table to contribute to the economic development of their countries. They represent active participations other than, and more importantly, gives them dignity and honor in respect that they are doing something about their state. It gives an opportunity to transform themselves other than expect other civilizations to transform them. You know, and once you transform yourself, you owe nobody. Yes, you can say thank you, you helped me, but I did it for myself. If you do it for me, I will forever owe you gratitude. And what you do, you take away my honor and respect and dignity. So let's do, I'm more inclined. There is a law for aid. but to prove concept, to do research, to demonstrate. But after demonstration, give me support to develop myself. Don't develop me, because forever I will owe you gratitude. And if I forever owe you gratitude, then, and lastly, it helps the local communities to be able to start to their government and say we are also contributing and can argue with their government on equal footing. You know, in Africa, in developing countries, people in the past have said, government, give us water. Government, give us education. Government, give us food. SMEs allow people to feed themselves, to send their children to school, and to afford health. Why? Because they are creating wealth. So essentially, it is a change of paradigm and power play. The power play is eventually given to the people. Thank you very much for the audience. Thank you very much.